Hello and welcome to the latest analysis by Pip My Day, and now we are looking at Euro Australian dollar. Euro Australian dollar has been presenting some very choppy moves in the recent past, but then in terms of volume, it's pretty high in volume, and it has given a lot of opportunity to pick up some pips. Even if it's a small range, it's been consistently moving in a higher volume. With the euro decision coming up today, the ECB policy decision, and then the press conference coming up in about 2 hours. In about 2 hours from now, I see a good opportunity to trade this pair, and I would like to share it with you. Now, if we look at a little longer time period, you can see the currency has moved from about 1.5500 to about 1.3795, about 1.3800. Now, though the downtrend has been a little bit choppy in this move, it's still a pretty large move. It's about 1,700 pips. And currently, what's happened is it has gone through a retracement. It has tested the 50% retracement, which is right over here. The 50% retracement is for this particular move is somewhere around 1.4660 area, and this is a very important time for us because a move above this would take it to the next retracement point or the next resistance, which is next major resistance, which is around 1.4862, and a move below would could actually go all the way to retest these lows, which is way below at 1.3800. Okay, but this is more in medium term perspective, but let's see what we can do in the short term perspective. Let me just zoom in over here a little bit, and yeah, now the focus for us is this particular area. Now this is a very typical or a classic example of a double top. Now if this double top has to work, now first of all we should not find any close above this open or close position. So 1.4714 is a critical area for a close. If we find a daily close above this, then it's not a double top, and especially if it goes on to take out this high, then it's a double top failure. But as long as it stays within this range, a double top is very much on the cards, and that is pretty bearish for the pair. Now, um, what does if looking at some of the candlestick formations, these three closes on the lower side are pretty significant currently, because first of all, after this swift upward move and a pretty big gap from the weekend, you would have expected the currency pair to really go ahead with a little more force and close above this high. But that hasn't happened. Though it opened above the high, the close has been below, and then it has been consistently coming down. And today the Australian dollar has been looking pretty weak, and that is shown in this particular move, which is a current day candle. But it still does not take away the possibility that it can go further down. Now, if it continues to go down, confirmation is if this particular low is taken out. If this low is taken out, then it means that after these three candles, if a continuation of a low would mean taking out of these lows or the support, or in other words, you can say it would retest the support in the area of 1.4230. Now, there are two ways that we can trade this. One is a conservative way and the other is an aggressive way, of course. Now, an aggressive way would be to enter this position short around 1.47 even area. Now, what that would mean is placing a stop either above 1.4740, which would just be about a 40 pip stop, or if you want to keep it more safe, you could place this stop over this high, above this high, which would be 1.4776. Now we're talking about 80 to 90 pips of stop loss in this setup, but take profit would be below this lows, which is precisely around 1.42 even. Now that's a little bit aggressive because we do not have a confirmation that this is a double top, and it is pretty bearish. The conservative entry would be if the pair moves below these lows, the low at 1.4590. In that case, you could look at an entry somewhere around 1.4580 area, and then place your stop just above these highs that it has created, and that's around 1.4740. Now that gives us about 150 pips stop loss, and on the take profit that would be around 380 pips. Now that's also an excellent stop loss to take profit ratio, and it is pretty much tradable. So this is my analysis of this current situation, and I think it is highly tradable also because of the volume that it's been showing. I hope it's helpful, and I hope it results in pocketing some good pips for you all. Thank you once again, and until next time, happy trading and happy pipping.